Good morning, everyone. Can you hear me okay? This is Chris Brecher. I'm using the Chart Patterns Mastery. I love being in this new Essentials room, and we're dual broadcasting with the YouTube room. Very exciting to be triple broadcasting. So, what are we going to go over today? Well, the first thing is welcome in the Essentials room. That's not free anymore. So the YouTube, you're getting a big bonus in here. And for the Chart Patterns Mastery, I always like to share what I'm doing in the other room. So I like continuity. So the first thing I thought I'd show you is the long-term thing of the bonds versus the SPX. Because everybody's saying, oh, the bonds, all this. And by the way, PHM, the higher bonds go, the higher the housing stocks go. Just keep that in mind. Stock was getting rocked earlier. But getting back to it, here's the bond market on the left. And I'm going to show you on a weekly chart what it did in 1999. Keep in mind, I think of the NASDAQ as sort of like 1999 with the sort of mania back then, the internet and all that. So that's the bond market on the right. 1999 into 2000 got rocked. That's a lot. So got rocked. It went right even lower. Look at that. Wow. 112 to 90, 89. 89. Wow. So on the other hand, go and look at the X. I want to be sure everybody can hear me. Great. So the NDX, what are we seeing in here? I want to be sure I have the chat in. The NDX went straight up. I know I've showed this before, but I think it's a big deal. So here is the NDX. Yeah, totally different. So it went on longer than you ever imagined with the bond market getting killed, sort of like now. When did the NDX stop going up? Not when the bonds started rallying. Yeah, the bonds rallied when everybody thought we might go in a recession, which we sort of did. But this sold off once you got either reversal candles up here, which you can see on a daily chart, or a big trend line. So if I go into a daily chart and you go back to 1999, there, I think you see it a mile away. So you see the parabolic move, you see sort of reversal candles, but those are tough. I wouldn't just go on literal stuff like a reversal candle. I like trend lines. I like trend lines, or I like bull or bear flags or Brecher ledges. So there's a little trend line. Now you might say, well, that's only a little one. But if you go back all the way back here, there wasn't one trend line that got broken. So just keep that in mind. Now, yeah, you're starting to get one trend line. That's on a daily. On a weekly, no. This is usually how tops look, where you get a lot of futzing around for weeks. So keep in mind that we've had one. This might be a down week. That's it. 1 week. Look at that. Now, you had a little high 2 weeks ago, but really we almost tested it earlier in the week. So finally now, unless the NASDAQ's up 300 today, you're going to have like a little red candle. But you just don't have that kind of trend line yet. Intraday, sure, we found some really great ideas, but I thought I'd just show you that macro kind of thing. So that's number one. The next thing to see is TLT. Well, first thing's this. Nobody believes me on this, and I've been harping on this for the last year. That's a 40-year uptrend from when I started in the business. So 1982, Volcker decided to ease rates. The bond market soared, the stock market soared. This trend line is valid from 1982, and it broke. It broke last year. So that's a big deal. And everybody talking about the bond market rallying. No way. When you have that kind of break, yeah, you're going to get some rallies. And this arrow I drew about a month ago, actually about 3 months ago. That's overbought in a downtrend. And that's what happened. So as you see, now this is lagging a little. So probably in September, even if it's here, that will be back down here. But the whole point is that's what a bear market looks like. Everybody thinks it's going to rally. Well, the trend line mattered. So that's all I mean. The trend line mattered. So now you might say, well, it's done this, so there are other places to put your money. Why did the NDX stay up like this, just like 1999? So keep in mind, it did get hit until you on the left until you got this AI mania, and that's pulled everything up. So, you go with what's there. Do I think it's an accident waiting to happen? Yeah, but you don't have those trend lines yet. And the problem is if you get this, and you get this finally to have some trend line and break under it, everybody's going to think they missed it, when really that's just the beginning. So, but I want to go over MACD, and I'll go over that in a minute because that matters too. Okay, first thing, TLT. This was on a chart this morning on the mastery side. There you go. There's the trend line I drew. So it's oversold like you see, but it's been oversold before. It's this gap. Look at this gap right here. Right there. So on our patterns mastery, we one of our loyal clients, Penn, always shows the gaps. Now, gaps don't have to be filled. What it means, though, is that's the path of least support. So if something's already plummeting, that's where it's probably going to stop, well, for now. And check this out. It stopped right there. That's pretty cool. So just want to show you that, and I really appreciate everybody showing the gaps like that. So gaps don't have to be filled unless the direction dictates that it should be filled. So like these, you get yourself trashed if you're like, yeah, these have to go and fill the gap. No, they don't. If you sell off, sure they can. Just like if you sell off here, you already filled one gap yesterday. So on the way down, a lot of times it stops at gaps. So we call those air holes. So that's one thing. Just want to show you that. The next thing I wanted to show you, and a lot of this is probably redundant. And by the way, chart patterns mastery. Did you see NVIDIA? So we have a habit of this was also posted. Just so you know, these are the kind of crazy trades we do. So basically, we look for bull or bear flags all day, every day, or creative things. So what's the creative thing? NVIDIA going to the strike price. So this was actually posted that I shorted right there. Of course, I got out too early, but that's a creative trade. If I could combine that with a bear flag, it's extremely powerful. So now I posted this on social media. I'm not perfect. I pointed out the bear flag. Yeah, I'm great. I didn't do a darn thing. I miss things all the time, but I got another chance. So that's why I'm here all day, to try to find those kind of things for you. So I'm trying all day to try to find the things. So you missed the first one, you made the second one. So getting back to it, I want to show you my indicators. And on Tuesday in this essentials room, I'm going to do a real specific half hour about all the indicators. I'm actually going to take off every indicator and build the chart one by one. I'm going to show you how to get into TD Ameritrade. I don't know how the heck I'm going to do it in a half an hour, but I'll try. So this is the first thing. What defines an uptrend or a downtrend? Well, it can be my trusty ATR trailing stop that I've used for years, or it could be the 50. Most people use a 50. In fact, most people use a 9 EMA, a 20 SMA, a 50 SMA, and a 200 SMA. Now, I know there are a lot of people, even with simpler, they use all different kinds of iterations. What's that mean to me? Whatever works. Yeah, whatever works, you use. So some days maybe the 9 EMA works. Sometimes the 21 EMA might work. But whatever gets you to the finish line is all I care about. But these are the ones I use. So I'm just looking at TLT in a downtrend and oversold. That's the next thing. I use the MACD and I use a 31016. And now let me tell you, when you go to TradingView or you go into Thinkorswim, they have a thing called LBR 2 lines. So, no offense to LBR, but that person ripped it off. All it is this, but exponential. No difference. No more, no less. So if you go on the right, and I'll do it with ES. So you see the simple down here. You can change that with Thinkorswim. Well, on the right, if I put the ES, and we're just going to put it here on a 4-hour chart. So a 4-hour chart got overbought, and it's overbought at resistance. That was also posted this morning. Overbought at resistance. So that's the simple. So let's just experiment. We do this all the time. Experiment. And see if there's a big difference. Not that, a 4-hour. There you go. So is there anything you see in here? Well, this has a lot more wiggles. That's one thing. When it rallies, this tends to move more faster. You see the overbought. This one's getting overbought. So, but you could, either one works pretty well. Gets you to the finish line. That's all I care about. It's getting to the finish line. I use the simple, but I'm always experimenting and I'm deciding whether on a short-term chart I should use the exponential. Well, let's see. There, 15-minute with negative divergence. That isn't. So I don't use negative divergence as much as you think. I use this for overbought or oversold. I just think negative divergence a lot of times is hindsight. So I just use really overbought, oversold. And a lot of people ask, it's a great question. What do you mean by overbought or oversold? It's sort of a question of semantics, but usually it's all about probability. So if you see this oversold, like you see right here, and you see it at support, yeah, then it's probably more important. You could actually put that on a 4-hour chart. There you go. Oversold. Right there. Right at prior highs become support. So you got oversold at support. So that's, now you might ask, well, how about if it was only right here? Well, the point is that even if it's right there, once it gets in this zone and it's at support, you're looking for reversal patterns. You're not just blindly going and buying. So if you put the ES on an ultra short-term chart, you'll see the reversal patterns. So in there. So then you could draw a trend line. So you're not going to get the bottom. I know that's corny, but what I mean by that is you got to have those trend lines. I just can't stress it enough. And you might miss a million things, but you're going to get the rest. All about the trend lines. I mean, that's the way I look at it. So when you're oversold near support, yep, you look for trend lines. You look for top bottoming formations. When you're near a top, yeah, the opposite. So there we go with another thing. Yeah, the ES overbought. Could it get more overbought? Yeah, because the resistance is actually there. The support was back down here and it worked. The resistance is right here. So that's about another, not much, about 20 points. Not much, 20 points. You see it on the right. I sort of zeroed in for you. That little thin zone where you don't have a lot of resistance. This is a lot of resistance. Right there. But that doesn't mean to go and just blindly short it when it gets up there. The same darn thing. You want to find some reversal patterns. Now, if you're doing it, let's say for a 3-day trade, you're probably going to use a 15-minute chart to look for these type of trend lines. If you're day trading, you're going to look for trend lines. Yeah, you don't have anything that looks like a reversal. Nothing. Now, it was ugly this morning, don't get me wrong, and we were at resistance. So if you were a morning trader, when would you look for the top? When you see trend lines or bear flags. You don't see any of that now. So, just keep that in mind. That's the way I'm looking at it in here. So, overbought, oversold, use price support and resistance. Using price support and resistance. I was looking to see if there were any questions on the YouTube side. And the first thing I think is I never turned it on, but I did. So you look for reversal patterns. Now, I also posted this. I'm proud of this one. This is called a Stewie pattern. So I invented that name right here. I put this on social media. So SPY still trying to break up from a Stewie pattern. All this is I highlight it like this. Now, this might look like I had martinis for lunch, but in a way, it looks like a Stewie pattern. This is earlier. So it's an inverse head and shoulders. And if it gets over that level, it could finally get back to that resistance. So that's 451.14. Where is it now? Yeah, not much higher. But it's getting there. Yeah, over this, over that line, it still hasn't completed this pattern. So that's the way I look at it. Now, the other thing, and this is the dilemma for a lot of traders. Let's say you came in today and you bought right here because you're like, it's breaking out. So you bought right here. Well, you get stopped right there. That's the thing. If you get stopped and then later it looks good again, just get back in. So we do that all the time where we make a mistake and then we get back in, we make more on the one we made on than the one we lost on. So that happens a lot. But ultimately, if this breaks up, you're talking about into here. So if you take the ES right here, that 45.60 right there, you see all those prior things. There's one caveat. And the caveat is if there are other indexes that blow through this, then you don't just blindly short here. Let me show you. Oh, there's that one. Look at that. It got above it. So now it's in this thin zone. So where would that put the ES? That would put it in this thin zone. Same difference. In that area, I'll look for reversal patterns. At the moment, everything looks fine. So just keep that in mind. That's what I'm trying to do in here. So basically, right now, if I'm trading and I'm just trading futures, the first thing I'm doing is I'm going to the daily chart. Daily chart's oversold. Same thing of what you said. Well, you didn't ask last week. It was good questions asking. Is that oversold? And I'm not trying to be a Weisenheimer, but if this bounces and this line starts hooking up, yeah, it was oversold. But the point is, when it gets that low, that at support, that's when you look for reversal patterns, which is what you got. So just keep that in mind. And it's still oversold. So a little trick here. This thing is basically, well, let's just say a 3-day moving average. It's not really, but it's sort of like a 3-day moving average. So it's the difference between the third moving average and 3 and 10. It's the difference between the 10 and the 3 simple moving average. That's really what it is. So the difference. So it's a 3 moving average. So if you have this down here, and now this is higher than here, I'll show you. So this green candle is higher than yesterday. So it stopped going down. It's not higher than that candle. So it's not going to go up very fast at all. Now, if it gets over those, yeah, then you're going to add this green candle and take out a sell one. But for now, with that kind of thing, you're not going to have this go up much. The blue line is a moving average of those two lines. So if this right here is lower than 16 days ago, that's the 16, then that blue line is going to still go down. That's the way it works. Just like up here. When this was higher than 16 days ago, it hooked back up. So that's the way it works. So you can anticipate a lot of this. The moral of the story, this is not going to really turn up unless this takes back a lot of this. So that's the thing. How about a 4 hour? So you could see that, yeah, it's hooked up. And that's because you take these candles and you're taking out these. So you're adding these and you're progressively taking out these. So that's how that works. It has to get over this for it to keep going. So just keep in mind that little hook right here where it stopped going up is because that was here. You take out 2 days and it's just flat. It's a little higher, but not much. So if this gets up to here, yeah, you're going to have like 8 days of things that are going to keep it up because that's higher than any of these. So if the next bar is up here, you're going to take out these 2 bars and it'll be higher. It's a good way to anticipate this stuff that I don't know if anybody else teaches. It's a really, really cool thing. So just keep that in mind in there. And by the way, getting back to it about the bonds, the bond market's gotten trashed lately and the ES has been, in the stratosphere. It can keep doing that for a long time, as you've seen. But when it gets that high relative to bonds, the price earnings is getting up to its upper echelons, like 19 or 20 on the S&P, which is historically really high. That doesn't mean it can't go higher. I know a lot of people got hurt in 1999 when the NASDAQ went to whatever PE. What it means is bad news is more likely to slam it temporarily. That was with the Japanese news. This was with the Fitch downgrade. So when it's this up here and overall the bonds have gotten nailed and the markets are expensive and sentiment was really bullish, it doesn't take much to knock it down. So just keep that in mind. I mean, that's the way I look at it. No bad news today. Yeah, the bond's up. Yeah, everybody's happy for now. Long term, I think it's a problem. But all I'm saying is when everything's this high relative to bonds in this area, it doesn't take a lot of news to knock it down. So that's number one, what I wanted you to know. So in there. But getting back to the MACD, I use the MACD on all sorts of things. When it comes to like a monthly, I don't use the low line. It's just too unreliable. You look right here. It's lagged so much, it was still going up while the red line was getting trashed. So back here, we got less bearish because you were at support. In fact, I was bullish. I wasn't on the side of there, but we were bullish right there because it was oversold at support. That's why we were bullish. So that means to look for the reversal candles or reversal patterns, which we did. Now it's getting overbought near resistance, but you don't have the reversal candles yet. So that's that's where I am. So do I think it's dangerous? Yeah. Do I think I have the reversal patterns yet? No. So you see it a mile away. You don't have those reversal patterns yet. Usually on a weekly. Now, if you already broke down and you get overbought under something, like here I use the ATR trailing stop, then yeah, you could go down. If you're overbought on a weekly under the 50, it's usually really, really bearish, really great short opportunity because you're overbought under things. Now you might say, well, this one was overbought. That's why I try to combine the ATR trailing stop and the 50. I like when it's under at least one. Just like now, it's over both. So I can't do a darn thing when it's overbought in an uptrend. Overbought in an uptrend, you can't figure it out. So that's where I am right now. I think today, even today, if I see this ES all the way up here, all the way here, sure, I'll look for a reversal candle. But right now, I don't see the reason to do it. There's your Stewie pattern. That's a 4-hour. So there's your Stewie right here. It's not a perfect Stewie pattern or inverse head and shoulders because you have a lot of those twerks in here. So-called twerks or, big wicks. But theoretically, it could go up that amount. Sort of the width of this, like it's the inverse head and shoulders. That's about 30 points, and that would get you right to there. So it would blow through the first resistance and sort of overshoot to this one. So that's what I'm watching. I really think that you need to see that up here for me to really look, for a swing short. But I don't know if we're going to get that kind of thing. So for me, I'm just going to go and look for reversal patterns near that red line. That's all I'm going to do. Usually the reversal patterns, it's either going to present itself in some kind of reversal candlesticks or a whole group starts to roll over. That's the way I like doing it. So if this is going up, I'll look at a Tesla or I'll look at the chart, the chart groups or all of that stuff and see if there's a group to start with first. That's the way I look at it. If there's a group to start with first. And that's how I try to do it. I'll give you a for instance today. Now, like I said, I'm not perfect. I was a little disappointed I didn't get it. I showed you the NVIDIA bear flag. Tesla had one first. So, well, they both had it. What was the theory? The theory was the ES was overbought on a 4-hour. It hadn't hooked back up. So it was overbought on a 4-hour. So we come in the morning and I'm like, well, I don't want to just blindly short the ES, even though I worked the first time. But right here, I was looking for, after that little test, I was looking for what didn't go up on that second test. So Tesla popped out. And by the way, I'm going to see my sister-in-law, who's a widow now. My brother passed away. And I just got to tell you something. So we're getting a rental car because a rock hit her windshield and cracked it all the way across. And so we're going to Hertz. And the Mazdas are more expensive than the Teslas at the rental car. I'm in awe. So to rent one of these is $34 a day. I can't believe it. On the other hand, we're going to be in the mountains in North Carolina. I'm not sure I want a Tesla. So it's sort of interesting. But getting back to it, all news aside, this was the one I posted and I missed it. So what was the moral of the story? Moral of the story, look on the left and look at a 1-minute chart of the ES again. You see the hook up. right here. A hook up. Now that was at 948. Where was this at 948? It was forming a bear flag. Yeah, relative weakness. So if this goes up, probably this won't go up much. If this reverses, that'll be one of the first to go down, which is exactly what happened. NVIDIA did the same thing. Yeah, that new high, this was already forming a bear flag. That's why I was pissed off about it, but we got the second one. So you're not going to get every one. That was fast. That to that was 2 minutes. That's a little rough, but it did work. So I just wanted to show you, watch the broad market when it gets near resistance, and then look for stocks that already are failing and forming bear flags. That way, if you're wrong and this goes higher, these might go down anyway. So just, keep that in mind. That's the way I look at it. So what do you do now? Now, sort of, you're in a purgatory. The first thing I do is I look at this advanced decline, and I don't care about the slope as much as if it's up or down. So it's up for the day. It might underperform, but it's up. All you care about is it's up. If we play the last 15 minutes and we play some SPX stuff, some crazy stuff, we don't want it to have a slope straight up if we're playing puts. Then it matters. But right now, it doesn't really matter. So next thing, now that we have the ES near its upper echelons, first thing, do I want to play anything with that pattern? That's really going against the grain. Now, if that fails, I think you see a mile away, there's some stocks that already are going down. You got Google going down, trying to go to the strike price. You got NVIDIA, just won't get out of its own way in this area. And Tesla is just sticking at the 260. But it's really hard for me to initiate any kind of short when you see that pattern. And it's hard for me to initiate a long when you're at resistance. So it puts you in a real tough pickle here. So you see what's going on. You see that those could be bull flags. If they're at resistance, bull flags are less likely to work. But why fight it? Why fight this? There. Why fight the bull flag when it hasn't hit resistance? Now, I've been wrong 8 million times. If that goes down, sure, the stocks that I don't like are probably already going to go down. But I don't see the reason to do it. Now, if this was upside down and I saw that bear flag, I'd be going all over, either messing with the SPX or the SPY or the individual stocks. But I just don't see it right now. And like I said, you might say, well, why aren't you buying everything? Because the risk reward right now just isn't worth it. That just isn't enough for me to just take a stand and buy an SPX call. So that's why I'm not chasing anything. Yeah, definitely I agree with Penn. In fact, let me just show you something. Let me see if it works. So I've been starting to show at least a couple of minutes of me. I know this will scare you. I would hide your children if I were you. So there I am. Hi, everybody. So I collect stock market books. If you look behind you, I probably have about 150, all like shapes and sizes, but a lot of them from like 1929 and earlier. So I have that. I'm going to get a toggle thing where I can have a phone to the side and you can see all my monitors and see me sideways and look like I'm really working, which I am. So I will have that. I just don't have it right now. So, Jason, I lived near DuPont. I don't know if you know where that was. So, yeah, it's so just in the south side there. You went to Landon. Yeah, that Landon was yeah, that was across the river, I think. But yeah, that's where I was from, lived um, till I went to work at the boiler room. So the penny stock boiler room and then went to the floor. So, long time I was there and it's changed a lot. So good question though. So in here, what are you doing now? Well, the first thing I can do is see if any of the stocks, you see the bull flags aren't exactly working. And they're not exactly working because you're up near resistance. But while it's waffling, are the stocks that looked bad already going down? Yeah, they're going down. So the second this stopped going up, well, these were already going down. So the theory was that if they didn't go up, these would be the first to go down. Now, you might ask, why aren't you being more aggressive on stuff? Because you still haven't hit the objective up here. And I'd like to see this have some kind of bearish pattern. Those were bearish patterns. Those were good. That was this morning before the opening. But now all it's doing is it's the first bullish pattern that sort of failed. I'm not going to say it failed yet because you have support right there. So that's where I am right now. Definitely looking at this. Probably my favorite in here because it's just acting this way. I haven't done it yet. Is to mess around with NVIDIA because it has a habit of going to its strike price. Plus, it stopped going up when the markets went up. But it doesn't have that bear flag. So we hit that bear flag right there. No, I hit this one. This is the one I posted. I don't see the time. That one right there. Or that, they're little ones, just little ones in here, bull and bear flags. But you see, it's choppy. It's not showing you much except that. But look yesterday. There's a bear flag, and let me show you earlier. There's your bull flag. That's as good a bull flag as you could see. Look at that. Bull flag, bear flag, bull flag, sort of a bull flag. So we don't have those today. We might have them later, but this doesn't tell you a darn thing. So it's, there are days when it sets up, and I don't care about the stock. I hear a lot, oh, I know that stock. I just know patterns. So I'll just have like 8 million stocks up and look for those type of patterns. So that's how I try to do it. So this is the next thing I wanted to show you. You see what's going on. The bull flags didn't work, we're near resistance. And the ones that looked the worst went down. The ones that looked the best, these two didn't go down. So it's just interesting how that works, that they're already showing relative weakness. So pretty cool. So the other thing I wanted to show you was this scan. If you want to do a scan, now we have a lot of free people on the social thing, so I can't exactly show the mechanics of the scan. But basically, I'm doing scans of 5-minute squeezes. And then I save it for when alert things change. And they pop up here. Now, this doesn't mean it's a beautiful bull flag or bear flag. All it means in there, and let me tell you, you don't need the scan if you're able to trade with me and can see the bottom left. All this is doing is it's showing stocks with a consolidation. Some are going to look more juicy than others to do a trade. But it's nice to have that on the bottom left when I share my screens. That's and I think that's worked pretty well. So let me show you this. I'm just going to take up a lot of them. Let me see if I can move this up. There. So you got bear scanners, you got bull scanners. So what's the moral of the story? Number one is you look at those. So the next you look and see if something has a bear, like a bear flag, while this is doing this. So let's just look. All I'm doing is basically every bull and bear flag is a squeeze almost, but every squeeze isn't a bull or bear flag. So that's why I just can't rely on just like squeezes. So just keep that in mind. So, but I will use them to scan. So let's take some of them in here. So you got I really want to get there now in PayPal. That's at 12:06, 5 minutes ago. That's before these failed on the top. So let's take now in PayPal. And let's just take them on a 5-minute chart. That doesn't tell me a darn thing. Yeah, that's a consolidation, but that's not a bear flag. Is this a consolidation? Yeah, not really a 5-minute, but it alerts me to go to a shorter. Yeah, sort of. As you see the dots and dashes, it's because it's not as active as other stocks. But that's really cool to be able to have this up. So let's put I'm putting up Delta. Yeah, there you go. Now there's some caveats with bull and bear flags. A bull flag against resistance is less likely to work. A bull flag under in a downtrend is less likely to work, and vice versa for bear flags and all that. So just keep that in mind. So this is what we do all day. And the other thing I'm doing is scanning. So I'm looking at these, I'm using this scanner, and I'll adapt it. Maybe I'll make it 1-minute scanners. So just keep that in mind. But then I have a whole more group of stocks. And then I have a second computer, that has 2 more screens that have 15 stocks on each screen. So this way I can see if there's like a group that's starting to look good. So, you see it right here. This stock AI that's been a pain, it was 38 this morning, is finally forming a bull flag. I'm not sure if I want to play it. That group isn't acting that great. But that's why I have enough of these up. Sometimes it'll show me just a clear pattern. See, and now it's trying to come back. And now you might ask, why did it come back if it was a failed bull flag? It's all about support and resistance. So my first priority is chart patterns. My second priority is support and resistance. And then my third is probably combining like an ATR trailing stop, a 50, and definitely the MACD. I bet right here on an ultra short-term chart, I bet the MACD got oversold. So oversold at support, just like on a daily chart that we showed earlier. Yeah, and this is where it gets tough. You know, on a 4-hour, it's overbought. It's overbought on a 15. It's overbought. Well, it got a little oversold at support on a 1. This is why it's stuttering. I use a lot during the day, the 15. So I use an hourly MACD, which is overbought, a 15-minute that's overbought, a 5-minute, and a 1. So that's what I do. The problem is when you see a 15-minute this overbought, doesn't mean it can't get more overbought, but it usually means that you're going to stutter. You know, that buy ideas are less likely to work until it works this off. Now, if this gets back to 0 and this is still this high, that to me means it's worked off its oversold well. Or in other words, it's retained its bullish structure, even though this is 0 or under. So, I mean, that's how I look at it. And besides that, all I'm going to do is, I'm on the option side at 12:30 to 1, I believe. But then for the chart patterns mastery, we're just going to look for a lot of like option trades for the end of the day. So that's what we're going to be doing. No, I'm on the option side later. So I think, yeah, I'm on the option side later. But basically, that's what we do. So those kind of things. Now, I'll show you a little trader trick that we've been doing. And sometimes I miss it. And when I miss it, I'm not thrilled that I missed it. So, but let me show you because I want my subscribers to make money. A lot of times if the SPX at the end of the day is near a strike price, a lot of times we'll play puts just under the market. Now, one time this week calls worked, but why do puts work? Because a lot of companies can't buy back. Well, companies aren't allowed to buy back stock the last 10 minutes. So if there's a last minute sell program, there's an air hole because the companies can't buy it back. And I'll give you a for instance. And you know, in Chart Patterns Mastery, you had only 30 seconds. It was almost impossible. But let me show you what happened anyway. There. This was 45.08 with 1 minute to go. So I was trying to buy the 45.10 puts. Yeah, they never got to cheap. The 45.05 puts were 10 cents. You just had to throw your order in. And in 46 seconds, it went from 45.08 to 45.01 and a half. So those 10-cent puts went to 3.5. So it doesn't hurt to throw them in. The caveat, you really want this to be closer to the strike. 3 points away with a minute to go, the chances of it working are really slim. You wanted that to be 45.06. So we're going to try it again today. So if we see this, let's say this breaks up like it looks like it's going to do, and it goes to 45.41 with 3 minutes to go. I'm going to try to buy the 45.40 puts, but you got to throw your order in early just in case somebody panics and sells on the bid. You just have to have your order in. And just to let you know, a lot of times the scroll doesn't work right. I have to click always scroll on the bottom. So I have 9 minutes to go through everything and see who I blew off. So I'm sorry about that. Let's see. Not too many, thank goodness. Do I expect to see a rally? I have no idea. That's the thing. I don't bet on that kind of stuff. If a chart pattern presents itself, I'm going to play it. But I have no idea on the close. We're overbought at resistance, and I have to see the setup before I decide to do anything. So that's one thing. So usually a reversal candle, Joe. Well, there's one now, but I'm being idiotic saying that's a reversal candle when you see it. Let me give you a more example. So my favorite reversal candles are this. When I only look at the big candles, even though that's sort of big, I look for when a red candle takes back half a green. That's all I'm doing. And then you can have a stop at the top, or vice versa. When a green takes back half a red. That's about what I use. I don't look at every little thingy. So just to keep you in mind in there. So just that's the way I look at it in there. So Joe, I really like to do it on the big reversals. So like this. Now you might say, well, why didn't that short work? Let me show you. Because those aren't big. I want big candles. I want big old candles. And it didn't take back half. So little candles are a lot less reliable. So like this, that's a question. I'm not sure about that one. I like big ones. If I'm going to do a daily swing trade, I want a big candle. So, or a big bear flag like you see here. So I hope that helps. So 007, that was a joke what happened in 36 seconds. And that's where it gets tough, 007, because let's say you did it as an iron fly and you wanted it to expire worthless. And you didn't want to, use up a day trade. So I do those all the time because I have a tiny account, a different account that I look, I want it to just cast settle because that's not considered a day trade. But if you don't worry about that and you're up a ton, I get out with like a minute to go. I don't go for that last thing. But I'm telling you, if you have to for day trading minimum that you can't get out, usually it doesn't move that dramatic. That was pretty bad. But, Amazon and Apple's earnings were coming out. So that had something to do with it. So on there. And by the way, in your question about are we going to rally today? Well, theoretically, I mean, at the end of the day, I could say, yeah, we rallied, not that. This. Theoretically, this hasn't reached its objective. So that little Stewie thing I showed you, the objective is either 45, 60 or a little higher. So just keep that in mind. So, but 007, we talk about that all the time in the chart patterns mastery. You still made money on the 80%. So a couple of days ago, we made like 300% on half and 0 on the other half, because then we were playing with house money. So we like to do them in, like, we call them twosies. We like to do 2 of any contract so we can take profits on one. Theoretically, you always see in books, it says, so you can play with house money. That's considering that it goes your way. So, but, in there. And that brings me, and I always like talking about this because one of our moderators isn't thrilled about me talking about it. Let's say this is up here. So this is up near this resistance, right in here. And you want to do like an SPX fly, let's say around 45.40. Well, there's this XSP that's also cast settled. That's a 1/10 of the SPX. It trades. They'll honor whatever the spread is on the SPX, even if it looks wide. So let's say you think it's going to close at 450, 454, right here, or 45.40. You can go into this too expensive. You don't want to risk 95 cents to make $1.04. But a lot of times earlier in the day, this is equivalent to a 20-point wide butterfly in the SPY. A lot of times this will be like 47 cents. So how about a 3-wide equivalent of 10-point wide on the SPX? It's probably going to be about 28 cents. Yeah, 28 cents. You just sort of have experience about this. I don't like paying $3 on a 10-point wide fly with 3.5 hours left. So I just don't like doing that. SM77, I'd love to say, yeah, I've known all about it. I got an email from the CME. I didn't even know it existed. And then I went and looked and said, it trades a lot. I mean, for me, that trades a lot. So I don't know if it's new or not. I just got an email about it. I don't think it's that new. So wait. There is a way to find out. Let's go into like the leaps. Nah, they don't have any open interest. I just figured if it's been there for 3 years, they would have had a lot. So I actually don't know. All I know is we love trading it because if you're new trading the SPX, it's a lot less intimidating. So what do I mean by that? Well, if you did a 20-point wide fly in the SPX and you paid $3, so let's say it starts going your way and goes to 5. You're getting out. You don't want to risk $500. So you make your $2. That's fine, $200. But if you do want a 1/10 and it goes from 30 to 50, you're like, screw that. I'm not getting out. I've had a lot of times where it goes from 30 to $1.50. So you make almost the same amount as you made on that. Because this you just let run because it's just not that expensive. Do you really think you'd take a 3-point wide fly and ride it to 15? I don't think so. So that's what I mean. I tried the XND. It's funny you mentioned that. I wish, Dr. Bob, I wish that was more active. I would love to trade that because the NDX completely intimidates me. And it's not a tenth, I don't think. Or it would be 1,500. So it's 100th. Yeah, it's 100th. So I don't even know how that works. There's an easy way to tell. These are 30. Let's split the difference. Oh, I got to go. But it's 25 cents. Go into the 155s. Yeah, 28 cents. So yeah, it's sort of there. You're right. So thanks for sharing that. So everybody take care. I hope you enjoyed that. And Chart Patterns Mastery, it's nice to share that with you. And YouTube, it was great to have you on. So take care.